Let's take a look at some information and charts on Chainlink for BraveNewCoin. So Link is a decentralized Oracle network that connects off-world data with on-chain data. I guess off-world, not meaning otherworldly, but non-crypto data. It even connects crypto data to other crypto data. So it has an important use case, multifaceted, actually being used by pretty much everything in DeFi. And it can connect to any blockchain. Ideally, they do. Ideally, they keep connecting to every bridging thing, every chain imaginable, give them a bigger and bigger footprint, stranglehold on Oracle stuff. And they're certainly doing a good job of that by connecting to as many people and places as they can, especially if it's easy to do and it's relatively risk-free for them on a security level. Why not? We can look at some of the data feeds for tons of coins. They have 79 pairs on ETH. They're on Arbitrum, Phantom, Polygon, Avalanche, XDAI. They're on tons of stuff. How these work on an individual level is they have a certain number of data providers and they need a minimum threshold of those providers giving them info for price or whatever data, weather data, whatever. It can be anything in order to achieve a trusted value. They also have a deviation threshold built in as well. So this can get dicey in times of heavy volatility because a lot of these prices will be completely out of whack from each other from time to time when things are super volatile. And that may trigger some threshold parameter, right? And that kind of slows things down, but it helps prevent issues like Pith had today where the Oracle was reporting crazy out of whack pricing, right? I think in the future, we'll see DeFi and whoever else adopt like a multi-oracle approach even. Certainly possible where different oracles are looking at different information or taking different information into account. That way you don't have a single point of failure. Now, ideally, all these oracles are looking at different data sources because if they all have the same data source, then what does it really matter? But I can see like layer upon layer of mitigation for issues like this to prevent. Now, something like this hasn't happened on Link in quite some time, but it has happened from time to time in the deep past at this point. So these things can happen on a protocol level, but it doesn't really affect the token price unless they choose to bail out traders through the token. That's a whole nother can of worms, but it hasn't happened for Link for the most part. They have staking coming. I don't know when. I don't really care about hype or PR or whatever else. When it's here, we'll talk about it and we'll look at it and see how many people are staking. Great, awesome. We can look at the coins sitting in the wallet waiting to be distributed through staking, but I don't think there's a firm date just yet as far as when they're going to bring this about. What I have to bring up and I'm perpetually concerned with is Link token selling by Smart Contract Limited, the token or the holding company, I guess you could say, for Link. This is currently the makeup of all existing tokens as far as I'm aware. Node operator rewards are what the staking mechanism is proposed to be, I believe. And Smart Contract Limited has continued to sell at least 6 million tokens since February, every month, without fail. Which, look, it's fine. I don't care what they do, as long as people know about this and make trading decisions or informed decisions from there. On the one hand, you have the community telling you, yeah, you should hold, you should hold, you should hold, you should buy this, you should hold it. And on the other hand, you have the company behind the token selling the token. And yeah, they need business development, whatever else. You can do mental gymnastics in the hamster wheel and justify whatever you want. But at some point, how many millions per month do these people need, right? It is what it is. I'm gonna stay out of the opinions here on my neck of the woods, but it seems a bit absurd. Is this going to affect prices in the ultra near term? Probably not. It only really affects things if we're already bearish, just adds selling pressure. But if there is reasonable monthly volume, let's say, to hold this up, then it'll be fine. I mean, some of this could be OTC as well. Like, I don't really know that they're selling it. I just see that they are moving it out of their wallet into circulation. That's how you can read it. So saying they're selling it directly on exchanges isn't purposefully misleading. It's just that's the assumption. If it's being moved, it's probably being sold, right? So that's probably going to continue until they drain whatever else they have here. That's my spiel on that. If we look at the Oracle calls, contract calls, those have actually continued to increase. That's probably the most bullish metric you can find right now for Link as far as the protocol level. Number of calls is generally down or flat or not super high. It's still 12,000, 10 to 12,000 on any given day. It's been trending down. But again, I don't think this is necessarily going to move the Link price anyway. It's just nice to see like the use case in action. If we look at the token stats, transaction counts are approaching multi-month lows, or kind of just relaxed here, ranging at multi-month lows. Basically the lows from mid-2020. We saw a lot of activity on chain from mid-2020 to mid-2021. A lot of transfers happening on chain. Mid-2021 value-wise, along with price rising. So nothing too crazy to mention there. But if you're bullish, you want to see on-chain activity pick up. That's any coin, period, end of story. NVT, an inverse metric of economic utility relative to price, was sitting at all-time lows and is now rising again. So it's getting slowly more and more overbought, even with price declining. That's how I would read NVT here. Active addresses in the fill are certainly down from all-time highs, but they're not back to sub mid 2020 levels. And again, if you're bullish, you want to see on-chain activity pick up. Really the best metric that I can think of for on-chain activity relative to price is MVRV, which is a direct measure of market cap versus on-chain activity. And historically for most coins, anything above a 2x multiple is close to the top or the top. For Link, it's hit the 2x multiple at least 4 times. Currently that multiple is 1.2. You can see at a 2x multiple, it wasn't the top most recently, but it was close. We went from 33 to 47. MVRV went from 2 to 1.5. So actually MVRV declined on rising prices. Is that a type of bearish divergence to look for in the future? Probably. It seems to be a common theme amongst all these coins that I look at with declining MVRVs on rising price. So this isn't exactly in a buy zone as far as MVRV is concerned, but it's getting close. It's at 1.2. Buy zone in general, again, is anything below 1. And individually for coins, you can say, all right, Link is like 0.8 or less is a really good buy. If it gets that low, that's a serious consideration for a buy historically. Not a lot of data points, but we're using what we can here. So if this thing dips below 1, dips below 0.8, dips below 0.7, that's historically been a great buy over the long term. If you look at Chainlink Google Trends over the past 5 years, obviously Chainlink's a real world word in that Chainlink fence or whatever, but even before this baseline stuff was occurring, Chainlink started to perk up the term. So I'm assuming most of this is crypto related. In 2019, definitely perked up in 2020 along with the all-time highs. Currently it is down from highs significantly, but it's not, at zero, right? So there's some minor base here, and most of the hype euphoria has waned from the highs. If we look at the 1-year MA and the multiplier, the 5x multiplier, this has been a pretty good indicator. Again, limited data, but it's told you the buy zone, it's told you the sell zone. Most recently, we didn't actually hit the sell zone, the 5x multiple. We were held down by the midline. So going forward, we are approaching the buy zone at sub 23. And if I was buying sub 23, I'd be looking to the midline in the future, whatever that may be. If it's 75, if it's 55, if it's 100, if it's 105, whatever it is, for me, that would be the baseline, which is the 2.5x multiple. This white line is just the midline between the two. So 23 to 55 is still more than a 2x, 25 to 75, 25 to 105, whatever that trade is, it's still telling you historically this is a pretty good buying area, sub 22 currently. The 5200 cross is currently bullish, but we're below the 200, and this will probably crisscross again. Historically, since 2019, for the most part, this has held a bullish cross. So it doesn't make me super bullish to see this crossing back bearish, if it does, after it just crossed bullish from the bottom. It's definitely different than 2018, 2019, 2020. That was very clean. Bounce on the 200, go again, bounce on the 200, go again. Did that 6 or 7 times. This is still trying to establish hopefully a base. If you're bullish. If you're bearish, you want to see this M double top basically, right? This is some sort of echo bull trap. If you're bearish, you want to see this go back to sub 5, but you're probably not watching this video if you're bearish. 11 is the yearly pivot. That's the line in the sand to hold. It's going to get in trouble when it's below the most recent low at around 13. So that's really the do or die area if this thing collapses. If it collapses below 13 to 11, I fully expect it to go back to sub 5 because that's where the next support level is. So not a call, more of an if this then that. Watch this, see what happens. As it stands currently, it's more neutral than anything. Obviously ugly. Today was ugly across the board. You could probably argue head and shoulders here as well. But I wouldn't get overly bearish until we figure out what Q4 is going to be across the board. The cloud had its edge-to-edge trade, and now it's on the other edge of the cloud. And again, you don't like seeing anything below the cloud if you're bullish. You don't like seeing a bearish TK cross. But this just means if we do flip bullish into Q4, we will know for sure, certain, obviously, because we will be above the cloud in a very clean way with ideally a bullish cloud, right? Maybe we get some fractal that looks like this, where it was a bunch, it was a mess until it wasn't. But the point is, we really didn't hold above the cloud this entire time since the bottom, since we reversed to the downside. So anything above the cloud going forward, in this case, 28 or higher in the future, should lead to bullish continuation. Now, is that going to be your 4, 5, 10x? I don't know, but it tells you based on the cloud that things are looking bullish once again. Some people prefer the 12-hour settings, which is basically the doubled cut in half, or just the daily cut in half, whatever, however you want to think about that. We're also below the cloud there. So this has completely reset. And we went from bearish to reversing to potentially being bullish to resetting that completely. And on the 12-hour, what this is going to look like, very similar to early 2021, if this goes again, is a complete breakout with a bullish cloud with bullish TK cross. Super obvious stuff, super basic cloud stuff. If that happens post-October into Q4. Link ETH, a lot of these other ETH pairs, actually looks decently okay. I mean, you could argue bear flag here, but I'm going to argue this thing is basing, and the 5200 is still pretty decently spread apart. It's holding at some sort of VPVR level, and RSI is slowly turning up. This is painfully bull diving here, but you are getting a series of higher lows over the past few months. Now, if this drops below the lowest low, then I guess you could say, yeah, it's bear territory once again. But I actually don't hate this reversal play based on divs and mean reversion and VPVR to around 0.1 against ETH. The trend is still definitively bearish, right? It's below the 200-day moving average, and it's in between some super wide yearly pivots. But this is potentially basing for at least a move to 0.1. If it gets above 0.1, it's probably going to 0.01 to 0.015 based on VPVR, right? It'll recapture this level or whatever. So it's not a massive trade, but it's a decent trade if you're looking to stack ETH, for example. I think a lot of these ETH pairs have been basing for many months now. And against BTC, it doesn't look half that bad either. Half that bad either, with not a perfect inverted head and shoulders fractal, but you're getting inverted head and shoulder fractal vibes. The 5200 is still crossed bearish. We're still below both the 50 and the 200. I get that. This doesn't look great where it stands here. The next support down based on volume is around 4,500 sats. Doesn't look great, sure, but this thing could start to look great rather quickly if you get another higher low here. If you get a bull div, this thing's just been ranging from 4K to 7K sats since January, right? Since November, December. So I'm not expecting miracles here, but this doesn't look half bad if we can get another bullish 5200 cross. So Link, the protocol is great, has a use case. It's being used across DeFi and lots of other stuff. The token being sold by the company that issued it, still unrelenting pace, 6 million coins per month. The community is super strong on Link, probably. We don't really know because a lot of that is astroturfed. So hopefully the AstroTurf commenters have stopped listening at this point in the video, but they do exist, so be aware of that. Technicals are kind of all over the place, honestly. I like sub 23 as a buy. I like Link ETH as a buy, as a knife catch or stab reversal play, and Link BTC probably needs a little bit more time, but it still looks decent. Lastly, I'll just mention the ETH BTC fund and DeFi portfolio. I trade for Techemy Capital and Enzyme Finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance, allocations. You can see we're holding a bunch of Link here. You can see trades at the bottom. You can see I swapped out Link for SNX. Basically, this was what, 25, almost a month ago. And if you're wondering and still don't get like why oracles matter, oracles are what make things like Enzyme work as far as determining token values and DEX pricing and slippage and all sorts of reasons why something like oracles are a big deal for trading. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.